a.m. on Wednesday, February 5th, 9:45 New York time. We are, an hour and a half or so into the New York session. Just want to take a quick look at a couple of things as kind of follow-up. So first, just kind of looking at the euro versus the Kiwi, or the Kiwi dollar in general. So during the Asian session last night, made a couple of videos in regards to the New Zealand dollar employment numbers that came out. And I was expecting to see the New Zealand dollar weaken after that news, because of the fact that it looked like it was kind of a mixed bag, not really all that impressive on the data. But as you can look at it now, since then, the market has. The market at this point has come down. This was the candle after the news, and basically it looks like it wants to continue to go down here on the Euro Kiwi. So if we zoom out a little bit here on this pair, this still is potentially just a correction to an uptrend, but to me, this looks more like a trend. From an Elliott wave standpoint, this still looks like a 1, 2, 3, 4, 5, and it might even still want to go down more. And if this is a trend, then even if this is ultimately a correction, that means what it'll do is it'll go up and then it'll come down again for an ABC. So if this is a correction, it is going to go back up. It's going to have to really prove it to me now. Because it's really not clear. So, we when we started moving up, we had this choppy move up, then we had this nice ABC right here. Okay, and then the market shot up, and now it's just kind of moving lower. And most of this is being driven by strength in the Kiwi rather than Euro weakness. So the Euro is pretty neutral right now as a currency. There's not a lot of news on the Euro. It's just... So most of the euro crosses are being influenced by the currency that they're paired with. So if you look at the euro versus the Aussie as an example, this just continues to move down. You can see ever since the RBA news a couple of days ago, this has just continued to move down. And so we're approaching the top side. So remember, we had this big breakout of this triangle last week, and now we've kind of erased at least half of that move, since down here. Probably approaching more like the 61.8 retracement, but at least half of it we've now retraced. Let's see here where we're at. Yeah, we're at about the 50% right now. So we're at the 50% fib right now. And this is pretty strong. But it'd be curious to see what happens when we get to this trend line right here. This is really strong. There's no doubt. Originally, I was thinking that this move down was a 4, and then it would go back up for 5. But this is, so far out of proportion now. In fact, I'm just going to clean up this chart and just take this template off and everything. So, just looking at this, the only thing I want to add back in here maybe is this trend line across the top here. I don't know, something like this. Trend lines are so subjective. So something like that. So we'll see, when this comes down, what this does. But at this point, the Aussie's, really strong. And you can just see this just continuing to fall. Now we do have a couple of things on the calendar coming up for the Aussie for the rest of this week that are going to, either help that strength continue or may at least pause the market. And so tonight during the Asian session, we have retail sales and trade balance. Those could be mildly influential depending how they come out. If they come out really strong, better than expected on both of these, then I would expect the Aussie continue to strengthen. If they come out below expectations, I wouldn't expect you'll see much in terms of weakening of the Aussie, because it's been so strong that I think it would take more than retail sales and trade balance, unless they're way out of whack. And of course, they are expecting a pretty significant drop in retail sales and negative numbers, negative 0.2 versus a prior positive 0.9. And trade balance are expecting a little bit of a dip too, 5.65 billion versus 5.8 previous. So not a huge change there, but nevertheless, a beat on both of these would be really good. So, but if they're negative or it's a mixed bag, then I would expect a pretty muted response, because tomorrow during the Asian session we're going to have Governor Lowe speaking. The RBA's chief, Governor Lowe, and then their monetary policy statement, which is going to give a lot of insights into kind of direction going forward, coming off their rate decision earlier in the week. So these might have some movement, but I think this will really kind of set the tone going forward. And if the market still feels pretty bullish about the Aussie, then it's likely it's going to just keep going positive. But we'll see, because like I said, it's approaching technically it's approaching some pretty key levels, and it's taking a little pause right now. But this is really nothing to speak of. And like I said, originally I thought that this was a 1, 2, 3, and then a 4, and then up for 5. But this is just, like I said, so far out of proportion. I mean, this move down is so big. Compared to this, I just can't see this being a correction. I don't see an ABC in here. It's just straight down. So, anyways, with the Aussie, we'll just continue to watch it. It's not a trade I took, unfortunately. I wish I did, but I didn't, and I've just been hasn't really been any real significant pullback for me to feel comfortable jumping in. So, but all the Aussie pairs are strengthening. So, and it's a little bit of risk on sentiment too. Coronavirus, whatever, waning a little bit in terms in the news, and things like that. So, anyways, Aussie versus the Canadian. Let's just take a look at some of these. Not as strong because the Canadian. Let's see what else we got here. Yeah, I mean, all the Aussie pairs, are basically have been up since since the beginning of the week. So we'll keep an eye on those. U.S. dollar, in terms of just news, we had ADP non-farm employment numbers came out this morning about an hour and 20 minutes ago, hour and a half ago. They really smashed expectations. 291,000 jobs versus a projected 157, and so that was really a big number, right? So now this ADP number, the private payroll numbers, does not move the market the way the government non-farm payroll, which comes out on Friday. So, and sometimes they don't align. Sometimes you'll see these numbers completely different. So, I don't really like to make any forecasts saying that, well, because ADP number was really strong, that the NFP number is going to come out really strong on Friday. But it might. I don't know. They're expecting an improvement. But if we look at like previous, I don't know if it'll let me open two of these at once. Let's see here. No, it won't. I'd have to look at them side by side. I don't want to do that right now. You can do that too. To look at, so we came out, let's say the last time we came out on the ADP number, 202 versus 160. And then down here we came out 145 versus 160. So you see the big number, right? The difference. This is just one example. So last time we came out 202,000 in January on the ADP number, and then the NFP number came out at only 145, below expectation. So that's why you can't always make that jump, because sometimes these numbers don't align because they're looking at different data sets. That's why. The ADP number is more of the private payroll sector, whereas the NFP one is a little bit more, is a little bit more diverse in terms of the data set that they're pulling from. So that's why it doesn't always line up. But anyway, so the dollar anyway is catching a little bit of a bid this morning either way. We do have ISM non-manufacturing coming out in about 5 minutes. And if that comes out positive, then expect the dollar to continue to be supported. These PMI numbers have been a little bit more market moving than they've been in the past, as everybody kind of tries to get a beat on where the U.S. economy is going this year. So they're expecting a slight increase. So if this comes out, this is a beat on this, then expect the dollar to be supported. But, NFP, of course, always has potential to be market moving, but some months it doesn't. So anyways, and that's it. The pound is weakening this morning too. So let's see here. Let's look at a couple of these. Get my charts to respond here. There's the pound Canadian. Again, we had this move down correction. Appears to be moving down now. Not all that aggressive though right at the moment. Same thing with the pound versus the yen. Pound versus the Aussie. I'm sure that's moving down on the Aussie strength. Pound versus the US dollar, pound versus the Kiwi, they're all pretty much the same. They're all showing some weakness. This looks like a little ABC on the pound Swiss here around the 4-hour chart. Okay, ABC maybe moving down now. Not a lot of follow through. Pound versus the dollar. This was a little correction, strong move down, correction back to the 200. And now it's kind of breaking down a little bit. There's a little support line right here I've drawn in. It's kind of hovering right around that. So keep an eye on the pound. Could be some movement to the downside. It's a little quiet right now. So, but let's see what those do. And I think we'll probably just leave it there. So anyways, keep an eye on the US dollar. Keep an eye on the pound. The Kiwi for now is being supported. That is a little bit of a surprise, and the Aussie continues to catch a bid, and I think that strength will probably continue at least until we get these monetary policy statement in RBA Governor Lowe speaking tomorrow, and so unless there's some huge dovish shift in their language here, then I would expect that we'll continue to see this strengthen. But this will be kind of the turning pin for the Aussie. It's been very strong. The market's been really supportive. If they continue to be neutral to slightly bullish, then we'll continue to go up on this. So on the Aussie, but this will be the next thing to watch out for. So anyways, guys, I'll leave it there. Hope you all have a good day and happy trading, and we'll talk to you probably later on today. All right, thanks.